Hey guys, how's it going? Today we're going to be continuing with my series talking about the chapters from the IB Business Management textbook. To give you guys a summary, if you guys haven't seen my other videos, I will link to a playlist in the description below. But it's just to give you guys a resource to help you all prepare as the exams are incoming. Me just trying to explain everything as simply as possible. Anyway, we're going to get right into it. The chapter for today is the second chapter, chapter 1.2, types of organizations. And so this chapter kind of builds on the previous chapter. So 1.1, if you guys might remember, the last part of that section is talking about the business plan. And as part of the business plan, you have to identify what type of business are you going to have. And there are many types. Businesses come in all kinds of shapes and sizes with all kinds of different objectives. And this chapter begins to classify them and give us a bit more definition. All right, so how can we classify a business? How can we split them into different groups? Well, let's start with the basic one, private and public. All right, there are private sector businesses and public sector businesses. Private, that means you're a for-profit company and you're privately owned and you're privately financed. You're getting your own money. And yeah, generally you're trying to make money off of it. The public sector, on the other hand, those are goods and services that are offered by either the government or a local authority. They're not aiming for profit. They either are free or charge a very low fee. And examples would be, museums and hospitals and things like that. Low cost services from the government. All right. So knowing that, we can then begin to delve into, if you create a business, well, what does that fit into? Generally speaking, if it's a business, it's private sector. Rarely, especially if you are making a business, it's not going to be going into the public sector. It's going to be a private sector business. And so there are a bunch of different types of private sector businesses. They really fit into three main types, and each of those has its own subtypes. And we'll get into all the specifications. Do not worry, it is very simple. So the three types are for-profit commercial organizations. Then we have for-profit social enterprises and nonprofit social enterprises. So I'm looking to the side. I do have my notes here that I'm working off of. Unfortunately, I don't have any of this memorized. So this is just as much studying for me as it is for you guys. All right. So what are the types of for-profit or commercial organizations that we're going to see? Well, there's a bunch of different varieties. First, we got to define what actually are these. Basically, this is just your regular run-of-the-mill business. Most businesses are going to fit into this first category. The key difference here is the difference between organization and enterprise. Organization is a very broad term. Enterprise is more specifically referring to entrepreneurship. Okay. However, social, that's the key distinction as well. Social enterprise is getting into, well, we're talking about bigger social goals, not just the winning or not just the making of money. And so that's kind of a key distinction. Enterprise, typically entrepreneurship, but it's very, it's very similar to organization in a lot of ways, especially in the business context. But social enterprise means there's a social goal or there's some bigger societal goal than just make money. In this case, for-profit commercial organizations, we're making money. All right, so what are the types? First is sole trader. Sole trader means one person making this venture that they're putting together. In many cases, it's even self-employed. And so you're doing everything on your own, lone wolf. So this has advantages and disadvantages as outlined in the book. Advantages, it's simple. It's, few legal requirements. You just kind of set up and be, all right, this is my business. You have complete control. You don't have to deal with any restrictions, really. And all the income goes straight to you. You don't have to split it with anybody else. The disadvantages, the entire tax burden is also on you. However, this has some caveats because if it's a self-employment type situation, well, then you're not really paying many taxes because you're just paying individual taxes instead of corporate taxes. However, you are shouldering all of the tax burden. So any kind of cost, all that's on you. Furthermore, unlimited liability. Now, we're going to get into this unlimited liability stuff in a bit. Don't worry. Again, it's also very simple. Unlimited liability is basically saying here that if something bad happens at the company, you don't have any limit on how much you're going to have to pay for it. That means that even if you haven't invested this money into the business, it can still affect you. Like, say, for instance, you have a house. Well, if your business really starts losing money, and let's say your debtors really need you to pay that money back, they can take your house, even though your house has nothing to do with your business. It is your personal asset, and because you don't have unlimited liability, you're going to have to pay. So any benefits you could have are invested in this process. And if things really go south, if you're really in debt, if you really need that money, it's going to have to come out of your own personal expenses. You're not limited. The second option is a partnership. Now, a partnership is, as the name describes, partnering between multiple members. I think a good way to think about this is like a law firm. We often hear of law firms of lawyers and their partners. You got Will Sharp and Associates, right? And you have the different partners in that law firm. So what does this do? Well, first off, it spreads liability. Now, instead of like a sole trader, it's being one person. Now it's a variety of people. Another advantage is that you get a range of skills. Now, in that law firm, for instance, you have all these different partners coming in. Instead of it being one lawyer who could only do one type of law, instead you can now have a criminal lawyer. You could have someone who's focused on businesses. You could have someone focused on environmental issues, a whole range of things. Also, you get more capital because now each of these people can invest their own capital individually rather than one person. Basically, you're multiplying everything. Disadvantages, of course, you also get to divide everything because now all the money you make has to go back to these people because they're not going to be okay with them investing money and then you're the only one taking anything home at the end of the day. Also, unlimited liability still. So if things go south, you're still liable for anything. There's no limits on it. And this includes, even though you will be splitting liability, there could still be a point where debts get so high, you're going to have to take money out of your own bank account to pay for it because you don't have limits on your liability. Now, this gets into the other part of limited liability. So the first are a private limited company, LTD. Now, what does this mean? The two key words, private limited. Now, limited means limited liability. So this is a corporation you're making with multiple people, and you have limited liability. You're only liable up to what you've invested in the business. If things go south, you cannot lose more than what you have put into it. This means it's a much safer bet for you as an investor or as someone who is making this business because you're not going to have to pay your house for some corporate expenditure. However, the word private is an important part here because private means you're not selling shares of this business because that's another aspect of the business is does it sell shares on the stock market? Because you guys might remember stocks. The very important thing of like, for instance, when the stock market crashes, not very good for the economy. You guys might remember in the Great Depression, for example. So not good for the stock market to crash. Stocks are important in any big company, Google, Apple, Nike, whatever, you can buy stocks in that business. And many of them do sell their stocks in the stock market. A private company does not. There are some companies out there that are private. However, they tend to be smaller businesses, the ones that are private. This means the shares are limited to only the people who can trade that money or who are, a limited circle. Only if the business owners approve can that person buy shares. I think a great example of this is I have some members of my family who own a lake house, all right? And they've created a corporation to own this lake house. And it is a private company, which means that there are shares of this lake house and the members of the family go and they pay different amounts depending on who's maintaining the house the most, whatever. And they go trading shares between them, depending on who has the most responsibility of the lake house, who's going to get the benefits, et cetera, et cetera. Again, that's a great example of a private business because it's a closed circle. It's just the members of my family maintaining this lake house. No one else could come in. If someone came, from another country, no one could be like, hey, I want to buy shares in that lake house and buy shares without my family first approving of it. The disadvantage is that there are higher corporate tax rates. That's to say, because it is an LTD, you're paying more rates than if it's a partnership or sole trader. The other option is public limited company. So again, limited liability, so you're only liable for what you've paid. However, public means you are selling shares. Most of the world's major companies are public. At some point, they have this point where they reach a point of expansion. They say, we're going to go public. We're going to sell our shares. Most companies start private and then go public. And this provides some advantages and disadvantages. Advantages are more capital because now these shares can be sold on the market and every share someone buys, that's more capital for your business. It makes it more freely transferable because now let's say your owner dies. Well, now you have someone who's a shareholder, their shares can pass to someone else. It's much easier for you to manage things than if it's a sole trader or if it's a partnership and one of the partners dies. That really complicates things. You also have a higher capacity for expansion. As I mentioned, all the world's biggest businesses are for the most part public. I mean, Nike, Google, Apple, I mean, you name it, they're publicly traded because it just makes sense when you're really trying to get to the highest level. You tap into the highest potential for capital if you're on the stock market. That said, disadvantage, you can have hostile takeovers. If someone wakes up one day and says, all right, I'm going to buy 50% of the shares of this company, and they buy them, they are now the owner, the CEO. That's how that works. Like on the stock market, if you have the majority of the shares, you own the company. And so that means that unless you have, unless you really do have control over it, but again, a company like Google doesn't really, it's probably not going to happen. It would be quite hard because of the price of the share. But it's entirely possible for someone to come in and take over the ownership of a company just by buying all of their stocks on the stock market, or the majority of them. They also have more restrictions, and their corporate tax is higher due to similar reasons of them being now a company that's private, or public, limited liability. They're dealing with the tax issues. They're dealing with the stock market. It's a whole mess. All right, so that closes off the for-profit commercial organizations. Now we're going to move to for-profit social enterprises. One is a cooperative. What is that? That is basically it's jointly owned by all of the members. And so they share the profits, share the benefits. In that case, you have shareholders have to help run the organization and works more spread out. You have equal voting rights between everybody. The disadvantage of those is that it does take more time because, again, it's a joint venture. Everyone has equal rights. So you got to get everyone to agree. And there's less profit for each shareholder because it's all spread out. Another option is microfinance providers. They're providing loans to people who can't get them through the traditional means, as in a bank or anything like that. They're giving it to the people that don't have options, which in one case, it's providing a service. It'd be someone like, low income people who are seen as a credit risk, etc. So it is a high risk business for them because they're offering to people who can't otherwise get a loan. However, on the flip side, they do end up making money because obviously those loans have interest on them. Another one is a public-private partnership. This is to say a public corporation or a public service that gets sold off to the private sector. Now, this is a controversial issue. It's one that we've seen in some places. For instance, there are many U.S. cities that, due to recent developments, sold off their water service or their electric service, whatever the case may be. They sold it off to a private company to run that for them. Now, this could have advantages. It can mean more efficient service. It can mean a variety of things. It means there's higher quality of the service because now it's a private company. They're dealing with competition. It's not a public service where, in the case of a public service, they're guaranteed to have the certain customers that they're going to have. A private company's not, because of course their contract can get revoked. So it does promote higher quality. However, it could also mean higher prices. Typically, private water is going to cost more than public water. And on top of that, you can deal with other shenanigans that come with, it being a business instead of the government running things. You can have also that the fact that the goal now is different. It's instead of, just the best service, it's also they're trying to maximize their profits. That means there could be cost cutting. There could be lower prices or lower quality. Sorry. There could be higher prices, really with the goal of just profit, not providing a better service. All right, so that brings us to the last category, which are nonprofit social enterprises. So these are ones, social enterprise again. This is with a social good in mind, a social goal in mind. So this is going further than just making money. This is trying to really promote something in society. With the nonprofit part, we're getting even heavier to this. This is where you get into your charities and et cetera, but I'll get more deeply into that. So you have a nonprofit business. So that's, operational or that's advocacy, but they're not trying to make money. They're just trying to provide a service for the people. So now there's two major types. You got nonprofit organizations and non-governmental organizations, NPOs and NGOs. Important not to get those mixed up. The first is an NPO. So that doesn't divide the funds between the owners. Instead, they raise the funds and they spend all of it on their beneficiaries. You could think of these like charities, all right? Most of them, that they are charities or things like that. But again, important thing is, where does the funding come from? The funding comes from donations and other sources like that. That's where the NGO distinction comes in, because this is a hard one to really know the difference between them. And this is also something that if you're really confused about it, I suggest you look up more videos to get more distinction, because this is a hard one. NGOs. These exist in the private sector. NPOs do not. They exist under usually a specific type of code that they're not fully a private sector business. NGOs tend to have humanitarian or education goals in mind, and they are sometimes funded by the government. That's another important thing. Sometimes funded by the government. Examples of this would be, UNESCO, and the Red Cross. Also the WWF, World Wildlife Foundation. All right, and then we have charities. So these are a type of NPO, and they're exempt from taxes. That's the case of many of them because, again, they're getting money from donations and things like that. They're not government funded. So due to those circumstances, they're exempt from taxes. Example of this would be Caritas. That's one thing that, fun fact about me, I'm currently living in Andorra. And here, Caritas is a major part of the life here. It's the way a lot of people get their food and other things like that. All right. And then the final one of these groups is a pressure group. These would be things like PETA, Greenpeace, or, LGBTQ activists. Basically, these groups, they're not running for election. They're not trying to get any office. They're just a group that has a social goal in mind that they're trying to push for, some kind of interest. Well, in that case, PETA, it's animal rights. Greenpeace, it's the environment. LGBTQ, it's for the rights of gay, lesbian, trans community, things like that. Typically, they're involved in politics or other things of that kind of manner. But they have a social goal in mind. They're putting pressure on the government, or they're putting pressure on businesses to try to achieve a certain social goal. There's no profit here because, again, they're nonprofit. But the goal is to get a certain type of social goal accomplished. Anyway, so that is the end of the summary of this section. I hope I've explained everything as comprehensively as possible. Again, the NGO-NPO distinction is a hard one. So I do recommend, if you guys have any problems, look that up. Of course, you can always put things in the comments as well. I'll try to go around answering. But that's the summary of this section. Hope you guys enjoyed, and I will keep coming with more videos soon. Have a good one.